Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Dong Jessen, Tony. Now let's get started with today's session. Good evening everyone. First, let's take a look. Yesterday, we talked about Trump facing 3 walls, and actually, today he ran into 2 of them. In terms of the budget, as Brother Yuan said, he hit 2 walls. Also, today, let's take a look at Tesla, which released its earnings report last night, as well as IBM and this one. KLA Corporation, alright, First, let's take a look at this, the Chinese wall, right? The Chinese wall, in the financial industry, actually, the term originally referred to the so-called firewall, meaning that departments couldn't, information couldn't be circulated without regulation. So it became kind of it's to protect the interests of clients, right? For example, in financial holding companies, now under financial holdings, there's joint marketing, and there are related laws and regulations. This concept basically comes from that, but in a more colloquial usage, China wall refers to any kind of major barrier or obstacle that's hard to overcome, or a market barrier that's hard to understand or get past. So, what we actually want to say is, it's more like the latter situation that we're talking about here. I feel like Trump, kind of ran into this China wall situation. Because yesterday, he was at it again. It's strange. And when I saw it this morning, I thought, Trump might have to. He might be planning to impose a technology export control measure on China, similar to the one imposed on Moscow after the Russia-Ukraine war. And of course, the target of this measure, Yes, it's more about the software side of things. Now, Bessent did confirm this, saying that all options are on the table. In other words, Trump's idea hasn't really been opposed. From this perspective, he's still temporarily acting as the executor of this. Looking at this from that angle, Reuters. Well, Reuters didn't actually report on the specific details, but it did mention earlier that it's similar to the kind of sanctions imposed on Russia, doing something like that. Similar sanctions, right? So, what kind of sanctions has Russia actually faced in recent years? Russia has been restricted from purchasing enterprise resource planning systems, ERP systems, customer management systems, customer relationship management systems, CRM systems, and also computer-aided design, that kind of thing. Yeah, this kind of software, right? And of course, among them, computer-aided design refers to CAD, right? Just CAD. So, the most valuable among them is definitely CAD. But let's be clear about the restrictions on Russia, okay? Maybe for Russia. When it comes to ERP and CRM, Russia might actually face some setbacks, because Russians, their mathematical and information management abilities are not weak at all. It's just that. When it comes to these systems, their talent or experience in handling them might not be as strong as in the US. But let me be clear, for software engineers in India or China, if you don't sell us ERP or CRM software, honestly, for China, that's really not a big deal. The main highlight in terms of volume is in the computer industry. So, what about the computer industry? Actually, in the past, CAD, that is, the software used for designing wafers, used to be a problem. But the thing is, well, when Biden escalated the tariff war, this area was actually affected. That is, after the US started its tech war, the CAD sector was indeed restricted. To be honest, China had already started preparing for this. For example, Huawei has been working on its own CAD software. Honestly, it might not be as user-friendly or as advanced as the American ones. It's not that complete yet. But the thing is, even if you really block it off, China probably won't be finished. Anyway, they can just make do with what they have, use it however they can, and you know how it goes. Then as soon as they start using it, there will be customer complaints, and then they'll just solve the problems. If it really gets in, wow, I think it probably won't even take a year and a half for China's CAD to catch up. So that's actually a pretty big issue if you're trying to impose restrictions. But the question is, does China have alternative products? My answer is yes, China does. And aside from CAD maybe being a bit behind, I think when it comes to things like CRM and ERP from a company perspective, these concepts really aren't that new to China. So Trump yesterday, right? He was at it again. He was saying a few days ago, or the day before yesterday, he said maybe he wouldn't meet with President Xi Jinping, that they might reach a good deal, but he wouldn't meet. But then yesterday, he changed his tune again. He said there are a lot of things to discuss. He wants to meet with Xi Jinping, and he wants to reach agreements on all the issues. And then there's stuff like rare earths and soybeans. The war in Ukraine, buying Russian oil, and nuclear weapons, right? Let me tell you, when he talks about these things over the past couple of days, I get a certain feeling. Let me just share it with everyone. My sense is that the Xi-Trump meeting this time, in South Korea, it might not necessarily follow the same pattern. The issues he's bringing up are all major ones, so basic issues like soybeans, semiconductors, and then the Ukraine war and all these topics. There are a lot of issues that will probably require both sides to go back and forth and discuss 2 or 3 times. And if you want to reach a consensus between the two of them before the Xi-Trump meeting, that's really a very difficult thing to do. I think we'll talk about this again when we get to the conclusion later. For now, I can tell everyone that I feel like there's a possibility that the Xi-Trump meeting, which was being planned, might not actually happen after the Korea visit. Because honestly, Trump is asking for too much. And China's stance is definitely going to be very tough, so the two sides haven't reached even a basic level of agreement. In this situation, according to the usual practice of Chinese leaders, they just won't meet with you. Alright, so let's take a look, because up until now, we've mostly been focusing on what the US is doing. Now, let's see what China has been busy with. China started this from Monday of this week. Today is the 4th plenary session. When I was preparing these materials, the session hadn't concluded yet, but there's something I want to say. Before the plenary session started, actually, on the very first day, Monday, or maybe even Sunday, there were already reports coming out that Vice Chairman of the Central Military Commission He Weidong, Miao Hua, and 9 other generals had been expelled from both the party and the military. And then, the reason given was anti-corruption. Now, we need to talk about this part first. In our field, finance and the financial markets, we honestly don't pay much attention to personnel changes, especially those involving military figures. If you're interested in that, you should look at political analysis, right? You can just watch political programs for that. What we want to talk about is what we care about, which comes later. Because it was mentioned before that this 4th plenary session would finalize a draft for the 15th 5-year plan, and the main focus after that is the 5-year plan itself. That's what really matters for finance and the economy, the 15th 5-year plan. With the 15th 5-year plan, we're once again seeing a focus on core technologies, especially in bottleneck areas like semiconductors, artificial intelligence, and quantum technology, where they're accelerating breakthroughs. In other words, the 15th 5-year plan is about overcoming these kinds of technical barriers. Now, I want to point out, this is actually from Fudan University in Shanghai, not an official statement, but I think the direction is very close, because technological innovation is the core driving force for high-quality development. At the same time, there's also talk about promoting the digital and intelligent transformation of traditional industries to support the construction of a modern system. So, technological innovation is an important lever for economic work. We need to pay attention to breakthroughs in key core technologies. Also, there's another point. In the future, China's GDP, according to official media reports, should grow at an average annual rate of over 4.5%. This is something to keep an eye on. In the past, the target was around 5% in recent years, sometimes explicitly set at 5 or 5.5. From 5.5, now it looks like it's going to drop to 4.5. This slowdown in economic growth basically aligns with market consensus. Given the stage of development of their economy, maintaining a very high growth rate is actually unrealistic, so it will gradually come down. The main areas of concern are the direction of industries. First, technology. That is, new quality productive forces. They want new breakthroughs. Then there's finance, agriculture, and energy. I've also listed a few more, like aiming for a 70% urbanization rate by 2028, completing the transformation task between 2024 and 2040, achieving carbon peaking by 2030, and the widespread adoption of artificial intelligence. The application adoption rate needs to reach 90%. There's something we especially need to mention. The adoption rate of artificial intelligence applications needs to exceed 90%. This is actually a key point. As we know, the development of AI in the US and China has reached this point now. You can observe this. If we broaden the scope of AI a bit, including things like the Internet of Things or smart manufacturing, and count all of that as part of general AI, there's something I want to point out here. China is really far ahead in AI applications. You can see all kinds of examples. Just search on Google for videos, like robots delivering things in hotels, and so on. Waiters are now service robots, and many foreigners enjoy interacting with them. There's also autonomous driving, food delivery robots, and more. Smart factories. Recently, dark factories have become popular, meaning factories that run without lights because no people are inside. I want to mention this, and that China's major ports, like export terminals, are already fully automated, unmanned ports. All of these are applications of general AI. That's what we're talking about. This application is going to be a major feature, and in the future, it could be the breakthrough point for AI development. Now, let's move on to the next topic, which is, of course, China. So, Trump has once again run into this storm, China. Let's make a brief conclusion. He wants to put pressure on China, but, as we need to point out, since the start of the second trade war this year, the US pressure on China hasn't succeeded. Do you remember? China was the first to step up and say that China isn't expensive. And then, when US Treasury bonds started, when the yields skyrocketed, Trump said it was expensive. So, Trump announced it on April 2nd, and by April 9th, he had already backed down. Also, the things he's trying to bring out this time have actually all been brought up before. Using the same trick twice, the second time around, people really just won't buy it anymore. There's nothing to be afraid of, because I've already seen all your tricks, so naturally there are ways to counter them. And there's one more thing. The items Trump wants to discuss, every time, each one has to be negotiated many times before any consensus is reached. So, if you want to have consensus on everything and reach a conclusion before the leaders of both sides meet, I think that's extremely difficult. If you dare to. To reach a consensus before next week, before the end of the month APEC meeting, is really difficult. Also, there's news that Besant and He Lifeng are only meeting this Saturday. They won't meet in Malaysia until Saturday. The timing is really tight, even if a decision is actually made. The two of them, Xi Jinping, just like I mentioned earlier, like how Xi Jinping is portrayed in Chinese state media. There still hasn't been any official announcement that Xi Jinping will attend the APEC meeting. Now, South Korea has confirmed that Xi Jinping will go, but you have to understand, if only South Korea has confirmed it, there's still a possibility that at the last minute, Li Chan could be sent instead. That's also possible. So, we need to pay attention to this, as it's still not confirmed. It's not really finalized yet, but in principle, Xi Jinping will go. Because usually, at these meetings, the head of state attends. China's usual practice is for the national leader to go. So that's this part. Now, let's talk about what Trump wants to do this. This agreement is really hard to reach just like that. And then, finally, we need to look at the fourth point. What China might be considering is a partial decoupling or a limited decoupling from the US. And we need to make that clear. When China played the rare earth card, that was the implication behind it. Such a powerful trump card comes with a very high price, and it's very likely that China will do something about this before the end of the year. They'll look for a target to implement what they call their iron fist approach. Now, the first target for this iron fist is the Netherlands, because they have ASML, the semiconductor company. Of course, this isn't about rare earths, but rather about export controls. We can keep an eye on this to see if the outcome will be more in line with what China wants. And then, there's another point we need to discuss. When we talked about the 15th five-year plan just now, we didn't mention one important point. In previous five-year plans, the focus was sometimes on achieving a moderately prosperous society, sometimes on fighting corruption, or on poverty alleviation, those kinds of goals. But you have to realize this time, if the focus is on technological self-reliance. When they talk about technological self-reliance in the 15th five-year plan, what does it actually mean? They're really using another term to say they want to decouple, but they don't say it directly. Instead, they use a softer, more indirect way by saying technological self-reliance. What I want to say is this. When China played the rare earth card, what they were really thinking about was decoupling from the US. It's not necessarily about a complete decoupling. It could also be a limited or partial decoupling. So you really need to pay attention. If their thinking is to decouple, even if it's just partial decoupling, and their strategic goal is already set on that, then just think about how they're going to carry it out and how. So, will there be uncertainty again about whether Trump and Xi Jinping will meet? It's quite possible that they might not necessarily meet as scheduled at the end of October, but if China wants to play the Trump card, they might not meet at all, or if they do, it could be very brief, just exchanging a couple of words. The main point is that Trump will have to keep negotiating with China, and this process could drag on for a while. But the problem is, time is not on Trump's side. The simplest reason is that next year, Trump faces the midterm elections. About half a year before the midterm elections, you need to have all your policies laid out, and ideally, you should already be seeing the results of those policies. Right now, some of Trump's policies are actually very controversial within the US, so if he doesn't resolve these issues, the consequences could be pretty dire for him. Now, let's take a look at international news. As for this second front, actually, in Russia, yesterday, during the day, we saw Russia intensifying its airstrikes on Ukraine, and it looks like they're trying to break the deadlock. In fact, just yesterday, there was a detailed map released. Actually, on the battlefield, Russia continues to gradually eat away at Ukrainian territory. Of course, the US Department of Defense's battle reports are written very clearly. So, in this situation, Trump, when he saw that there was no hope for peace, he started to turn hostile, sanctioning Russian oil companies, specifically Rosneft and Lukoil. These are two of Russia's biggest energy giants, so this was the most severe sanction. But the problem is, some say these sanctions are just scratching the surface. Of course, we can see that Trump was prepared. First, he made concessions on tariffs for India, lowering them to about 15 to 16%. Then, some executives at Indian refineries said, well, maybe I won't import from Russia anymore, since the tariffs have been reduced. So, one of the conditions is that India must gradually start reducing its purchases of Russian oil. But let me say something, not about India's stance, but about Russia's situation. In this case, Russia will end up becoming even more closely tied to China. So, if Trump really wants to play a three-way game, it's best not to let number 2 and number 3 team up and become allies. This is actually something well, anyway, anyone who's read or played Three Kingdoms, or has dealt with these kinds of three-way power struggles, knows this. But it seems like Trump doesn't see it that way. Also, the EU is looking into trade options. They want to increase their bargaining chips and negotiate with Beijing. But I think, as for the EU, to be honest, if the EU tries to play hardball, they're definitely going to get the short end of the stick with Beijing. They'll just end up embarrassed. On the other hand, if they take a softer approach, they might actually have a better chance of getting what they want. Now, let's take a look at the rare earths issue. I think this means China might show a bit of favor toward Europe. But if the EU is really too stubborn, then it might just be the bare minimum, maybe only giving favors to certain individual countries. And then, a few news items from the United States Congress. We'll add some updates, and also some news from the US. First, here it mentions meatpacking plants, and then one key point is, here's an overview of the new proposal from Congress regarding bank capital requirements. Basically, the scale of bank capital is set to increase by about 3 to 7%. This is indeed an increase. But the issue is, the first version in 2023, was going to raise it by 19%, nearly a fifth more in capital. Last year, Michelle Bowman took over this. The previous 19% proposal was put forward by former Vice Chair Michael Barr. Now, it's this new vice. When Michelle Bowman took over, she proposed 9%. but now it looks like it's going to be 3 to 7%, which is even lower. So why does this have an impact on bank profits? Well, with capital requirements going up, this is actually beneficial for bank stocks, and this will. If this really gets implemented, it will help the banks, and it will also be quite beneficial for traditional industries in the US. That is, the Dow Jones and the S&P will benefit more. So it's helpful for the financial sector as well. The prospects for the financial sector are still very positive. Also, yesterday there was a report. Someone suddenly wrote that Waller's stance is in favor of rate cuts, but he doesn't just blindly follow Trump. The fact that this report suddenly came out is kind of interesting to me, because we more or less already know Waller's position, but seeing it come out like this, I think maybe there's some new information coming out about Trump's picks for the Fed, which is why this kind of report is being published. Also, since the government is shut down, the information that private companies can get is incomplete. So, for example, the ADP report, which is often called the mini non-farm payroll, is the numbers from the past 2 months haven't been provided to the Federal Reserve. So, it seems like this is really adding a lot of trouble for the Fed when it comes to making decisions. Also, U.S. trade negotiator Greer said, he said they won't be importing large amounts of Argentine beef, even though there's some demand, because there's a bit of controversy. The main issue is that beef prices in the U.S. are just too high right now, and the demand for beef in the U.S. is huge, about 12 million metric tons a year. So, Trump did have this idea and brought it up with his overseas ally, Milei, when he came to power. But the thing is, I want to tell everyone in the US, these cattle ranchers, or maybe we should call them agricultural producers. Anyway, these farmers, these cattle ranchers are really unhappy about this. The high price of beef is one thing, but importing beef really ticks them off. Actually, when it comes to this issue, soybeans are also involved. So with beef and soybeans, Trump ended up offending a whole group of farmers and livestock producers. Actually, if you look at some American agriculture-related YouTubers, they're already talking about this. So I think for now, Trump might not be feeling the impact yet. But the problem is, this could have a huge effect on his loss of votes. Also, yesterday there were reports that Trump wants to launch a Section 301 investigation into the pricing of foreign pharmaceuticals. We can see that this is actually reasonable, because in fact, he's using IEPA, the International Emergency Economic Powers Act, which is basically the economic emergency law, to impose retaliatory tariffs or similar tariffs. After the Supreme Court case, what Trump is starting to do now isn't Section 332, but rather Section 301. These are more traditional tariffs that a US president can impose through executive authority. So basically, this would require going through an investigation process by the relevant office before it can be implemented. It looks like there's a chance that future tariffs might all shift to this approach. And then, as for the government shutdown issue, there are still disagreements. There's still a split in opinions on that. The longer this situation continues to drag on, the greater and more significant the pressure becomes on the Republican Party within the United States government, because all of that pressure tends to be blamed on the party that is currently in power. Break time equals 0.5s. Additionally, former President Donald Trump has stated that he wants to tear down the East Wing of the White House. You know, the White House is basically a large, round building in the center, and then there's the West Wing, the East Wing, and so on. The West Wing is more for banquets and formal events, while the West Wing is actually where the day-to-day business is handled. So over here, he wants to tear it down and rebuild it. The budget was raised to $300 million, but what I want to say is, he himself raised it to $300 million, and he said, oh, it's me and some of my friends putting up the money, plus some donors. Well, I don't know if these donors are people who made a fortune in cryptocurrency at home and are now donating. But what I really want to say is this, right? So, one of the reasons people previously gave for wanting to fire Powell, everyone talked about it like it was real, was that the Federal Reserve headquarters renovation cost $2.5 billion. Now, let me say this. The Fed building is an old structure, and they're renovating the whole thing. What you're seeing now is just a banquet hall, and that's already $300 million. Actually, I want to make it clear. I'm very clear about this. That $2.5 billion really isn't enough of a reason to fire Powell, but they're just making some political moves, trying to put pressure on him. That's how the US media works. Now, let's move on to the financial reports. First, let's talk about this. Of course, our focus today is on Tesla. We see that Tesla's revenue, the estimated revenue was $28,190,000,000, or rather, $28,095,000,000. The actual revenue was $28,095,000,000, which is much higher than the expected $26,365,000,000. But first, their EPS is actually lower. Now, the reason things look better is mainly because the number of electric vehicles sold hit a record high. But the problem is, as everyone knows, that's because there was a subsidy that expired on September 30th. That subsidy expired between September 30th and October 1st, right? And September 30th is counted in the third quarter. So, this is partly because of that. Before the subsidy expired, before the government incentive ended, everyone was rushing to buy, so the numbers were especially high. But the problem now is, after the subsidy is gone, where are your future sales going to come from? That's a big issue. That's their first problem. So, Tesla's official statement is that there are also factors like economic recovery, the push for self-driving cars, and then things like tariffs, trade, and fiscal policy changes bringing uncertainty and increasing pressure on investment in robotics, and then the rush to buy, like you just mentioned. But even in this buying frenzy, the market still expects that Tesla's deliveries this year will decline for the second year in a row. So this is actually a big problem. When you look at the financial report, it might seem pretty good at first glance, but in reality it's not. Our researcher here has already published a report on this. Runching, one of our analysts. He's already released the report. He concludes a neutral rating is best. Why? First, he thinks revenue growth is limited and your discounts are gone. Second, short-term profits likely won't rebound, which is key. Also, costs are rising and the outlook is uncertain. Also, the rollout of the robot has been postponed again. Last time at the earnings call, Musk said that everyone would see results in the third quarter of this year, and that mass production of the robot would start in the fourth quarter, beginning in October. But just recently, he postponed it again. Now, what we need to talk about is that for Tesla, the main thing people care about regarding revenue and earnings is how well the company is managed. First, look at electric vehicle delivery volume. Second, people might look at SpaceX or the performance of other subsidiaries that everyone pays attention to, like the solar energy company or other segments. Then, the third thing people look at is that, and after that, what's even more important is the robots. Because everyone thinks that robots are the future. And when it comes to hardware made in the US, it's basically just Apple and Tesla left. I'm talking about high-tech hardware. Apple assembles overseas, while Tesla does more assembly in the US, although they also have overseas operations. So if we talk about Tesla, whether their robots can actually be mass-produced is a really important factor for their future performance. But right now, the delivery of their robot has been postponed again. And, there was some news recently that's very relevant in Taiwan. Tesla said that their AI-5 chip won't just be produced by TSMC. Both Samsung and TSMC are involved in its development. But when we talk about AI and bring up Tesla, people don't immediately think of that. When you mention Tesla, the first thing that comes to mind is electric cars, and maybe the second thing is robots, or, what you might call, XA, right, and only after that do people think about the AI aspect. Sorry, actually, people should think of robots as being about electric cars and robot specs and features, not really about AI. Yours is pretty good, quite useful. But the problem is, when people think of the front-runners in AI right now, Tesla isn't really the first that comes to mind. So here, what we want to point out is that, regarding their delivery numbers, after-hours trading actually saw a drop. Maybe it wasn't that much, but it did fall by 3.21%. So actually, this part. This is actually a rather negative development, so the analysts have given a neutral rating. And we especially want to mention that Musk, at the very end, during the tail end of the earnings call, defended his compensation package. He even said something like, "If you don't give it to me, I'll leave." So, let me tell you, that's just the usual drama. You know, the ones who make the most noise get the candy, just like kids. Would he really be willing to leave Tesla? Is there any company out there that's a better fit for him than Tesla? Honestly, the answer is no. If he had to start all over again at his age and at this stage, it just wouldn't be the same. So, let's take a look. The main concern, as the analysts pointed out, is that Tesla's revenue growth momentum is limited. Profits will likely struggle to rebound soon, and costs are rising as the outlook stays uncertain. The robot launch has been postponed again, which sums up our view. So, we're neutral. Let's watch how the stock price moves. Also, IBM released its earnings. As for IBM, actually, two key software areas performed disappointingly, with the main one being the Red Hat division. So, they acquired Red Hat, but after the acquisition, the results haven't been particularly satisfying. Also, the cloud revenue division is still continuing to grow, and that's certainly true, but unfortunately, it is just not quite meeting the expectations that were set. IBM says that customers are expanding their AI applications, so it seems like they're feeling more confident. But the problem is, what investors care more about is that after you spent a lot of money to acquire Red Hat, the results you delivered weren't that great, so after-hours trading dropped by about 6.68%. And later, when we look at the pre-market performance, it's also not looking good. So, let's talk about how sometimes the market has a consensus on things, and sometimes it's more obvious. Alright, so you can try to promote the good aspects as much as possible, but when it comes to things that everyone thinks are really important, if those areas aren't doing well, like IBM's current situation, then it's a lot worse. I think the Big Blue is now probably going to have a tougher time. Well, let's take a more conservative view here. Last time, the reason for their performance, as our researcher mentioned, was that they were working on quantum computing. For people who are a bit older, like me, when you think of quantum computers or quantum computing, the first name that comes to mind is IBM. But the problem is, last time it was just something that caught people's attention. This time, though, the main focus is still on their software division, and it seems like their performance is still not good. And then finally, let's take a look at Lam Research. I think it's a bit of a pity, because Lam Research is a company that does semiconductor equipment maintenance. Well, it's a semiconductor equipment company. There are actually quite a few similar companies in Taiwan as well. It's a company similar to Lenovo, but one of its aspects is that it sees very strong demand for AI, so both its revenue and earnings have grown. Looking at the numbers, the expected revenue was 52.32, but the actual result was 53.24. The GAAP EPS was expected to be 12.11, but it came out at 12.40. So, both its revenue and earnings have beaten market expectations. Also, their CEO is doing a good job. In the key equipment sector, not only are they expanding their product and solution portfolio, but it also looks like their revenue will continue to grow. However, after-hours trading saw a big jump right after the results came out, which was great at first, but then it dropped back down. So right now, it's basically like this. It looks like it's just a slight drop. But I think we should pay attention here. This is worth noting. Is it actually good or not? Especially since its correlation with some Taiwanese equipment stocks might be relatively high. So everyone should keep an eye on Lam Research, LRCX, and how they perform going forward. Yesterday, a lot of companies released their earnings reports, and we've listed some of them above. A few important ones. Thermo Fisher. This company makes medical instruments and some testing equipment. Their performance is still very good. Yesterday, they were up slightly by 1.65%. Also, Boston Scientific, their business model is quite similar to Thermo Fisher. But they specifically emphasize that their new business segment has surged, with strong growth. So this year, their estimated annual revenue is expected to grow by about 20%. Originally, the estimate was only 18 to 19%, so they've revised it upward. Don't think that this growth rate isn't high, because they're selling health equipment and devices, you know. They're not selling AI chips, so this kind of growth is actually quite strong. I wanted to especially point out these two things to everyone. Next, there's one more thing. the Western Financial Holdings Alliance, WASTE. Alliance Capital, let me explain why we need to pay close attention to this. The main reason is that recently, regional banks have had some issues. There have been some problems, and this is a representative of regional banks. Plus, it's called Western Alliance, which tells you it's mainly based on the West Coast. If it were on the East Coast, it wouldn't be called Western Alliance. Now, what's being discussed here is also pretty important. I think it's about fraudulent loans, loan fraud, which is, well, really frustrating and definitely bad news. But it seems like, for now, it's just an isolated case, so that has helped calm the market's nerves a bit. Also, there was another company yesterday that I wasn't too familiar with, so I looked it up. It's a manufacturer that makes connectors. It's the same story as with the Taiwanese companies. The AI data is really strong, so these wire and connector manufacturers have been performing very well. Their revenue and earnings are both quite good. After hours, the stock went up by 1.6%. Now, moving on, this page is a bit more important, so let's pick a few to talk about. Trucking. Let's talk about trucking, which we've mentioned before. Revenue increased but profits dropped, so performance wasn't good, and after hours the stock fell by 3.6%. The natural gas pipeline was in line with expectations, with only slight changes. For Macau, this Las Vegas Sands. Macau Sands Hotel, right, it's currently investing in both Macau and Singapore, and now both are entering their return period, so their performance is pretty good. It went up by 4.7%. Then, you can see there are two companies listed below that have no revenue yet, but their stock prices are rising. Why? Well, both are new companies. The first one, Viking Therapeutics, is working on an oral weight loss drug, which is relatively. The more advanced ones are, Eli Lilly in the US, and then, in Europe it's Novo Nordisk. Viking is a small company, but they're working on it too. So, there are still people paying attention to them, because as long as this kind of drug succeeds, it's, just like that. Yeah, it's like hitting the jackpot. So that's why everyone is paying close attention. They said that some of the late-stage trials will be completed in the fourth quarter of this year. And they said the progress is on track, so they're pretty confident. But the thing is, after the late-stage trials are done, the real key is when the results are unblind. Its stock price did go up after hours, but this is just like with all new drugs. Before it actually comes out, any ups and downs in the price might be unnecessary and baseless. That's something everyone should keep in mind. Also, there's another company called QuantumScape, or QS. It's the same situation, no revenue, and their earnings are actually negative, even worse than expected. But the thing is, they're a developer of solid-state lithium batteries for electric vehicles, and they're based in the US. You know, in the US, as long as you're working on these kinds of things, key R&D projects, even if you're not making money yet, any good news is absolutely huge. So after hours, their stock, because they had some. This year, their expected losses were revised downward, so after hours, the stock jumped 15%. Now, Alcoa is pretty interesting. Their revenue is actually on the lower side, but their earnings are really strong. Why is that? Basically, the high aluminum prices offset the costs from Trump's tariffs. Also, in the second quarter, they sold off a joint venture with Saudi Arabia, which contributed to the increase. So that's a quick update to share with everyone about yesterday's earnings reports. Now, as for today's earnings, let's go over them. This week, since most of the tech companies will report next week, this week's reports are as follows. The more important tech companies are Tesla, which reported yesterday, and Intel, which is scheduled to report later today. Also, as for Molina, as you can see, their earnings report wasn't great, and the stock is taking a hit. Alright, and then there's Hasbro, American Airlines, Southwest Airlines, and O'Reilly. Ford is reporting after the market closes, and Newmont, the mining company, as well. If you're interested in the transportation sector, there's also Norfolk Southern. So, why do people care about the transportation sector? Let me explain a bit. It's because Buffett has a transportation index that he refers to. He considers it a benchmark for the overall economic climate. So, just wanted to share that with everyone. Tomorrow, we'll still be doing a live stream, but tomorrow, there will be fewer companies announcing results. The main focus will be on Baoqiao, Yandongli, Baker Hughes, and HCA, as well as Alaska Airlines. Now, let's take a quick look at the market. Yesterday, the US dollar was still slightly down, but today the dollar is rebounding. It seems like a short-term bottom has formed, but the big resistance is still at the 200-day moving average. Before that, I think the US dollar index will probably remain bullish. As for US Treasuries, yesterday, they did fall, that's right, down by 1.06 basis points, which is pretty significant. But today, they're rebounding. The 10-year, in particular, is seeing a bigger rebound, possibly because of this news. US Treasuries have now surpassed 38 trillion, so you can see that the rebound in the 10-year Treasury is actually quite significant. Now, this is another big issue. Honestly, I think the US is facing a lot of problems right now, but the thing is, we're in this. President Trump, he's still full of energy, going around talking to people, talking about China, talking about Russia, and also stirring things up domestically. Maybe it's really time to find a way to wrap things up first. That would probably be better for him. As for Brent crude oil, of course, I mentioned yesterday that it seems like Russia is about to be sanctioned, so yesterday it went up again, up by 2.07. But it left a really long upper shadow. But today, seeing confirmation that Russia's two state-owned giants are going to be sanctioned, oil prices reacted with an even bigger rebound, because the market expects supply to decrease. So actually, in this situation, today, they discussed, if I remember correctly, about a 5% cut. But I want to point something out. When you look at this kind of rebound, because when Russian oil was first sanctioned, it seemed really effective. But in the end, Russia always finds a way. They use shadow intermediaries or whatever methods to get the oil out and sell it. And if that really doesn't work, they'll just keep selling to China. So I think, in this regard, as for oil prices, I think, just keep an eye on them in the short term. Now, gold prices yesterday still faced some selling pressure and ended up dipping slightly by 0.65%. There was a rebound on Thursday, though. Let's take a look. Right now, it's just bounced back to the 50-day and 20-day moving averages, which is actually pretty strong. But let me tell you, it's not out of the woods yet. Let's watch it a bit longer. So, I can only emphasize again that at this price level, gold is basically a trading buy. If you buy in at this point, unless you already bought some earlier, otherwise buying in now can't really be considered from a hedging perspective. It's more of a speculative move. Now, Bitcoin, over here, after yesterday's big drop, today there's a rebound. So for Bitcoin, let's put it this way, Bitcoin has entered a tug-of-war between bulls and bears. Right now, the big players are just watching from the sidelines. They're waiting for a turning signal, so I'm just sharing this for your reference. I know a lot of young people seem to really love Bitcoin, but I just want to tell you that this doesn't look like good news. It's not good news for the overall financial market either, because whenever something starts to correct, you really have to worry about the possibility of a contagion effect. As for the Dow Jones, yesterday it was affected by the US trade war, specifically the restrictions on exports. That had an impact, and then there was also the digestion of corporate earnings reports. So on Wednesday, it dropped by 0.71%. The S&P fell 0.53%. When a bullish candlestick was expected, a bearish one appeared instead. Sorry, I made a mistake about the Dow Jones earlier. It should be the 23rd, not the 22nd. That's the correct date. Also, the S&P Volatility Index rebounded upwards again. And, as you just mentioned, yesterday the Da Vinci Surgical System, that's really impressive, so its stock went up by 13.89%. And then, Intuitive Surgical. Avery Dennison, I honestly don't know what they do, just being upfront with everyone. Now, Halliburton and Schlumberger, these two are both oilfield service companies. Halliburton said, they're getting into AI-powered energy development, and it looks like Schlumberger is following suit and also going up. I think they probably have the same intention to get into this field. Now, yesterday, there was a drop. Linux is an investment company, and its decline was a bit worse. As for NetEase, it's still being affected by the tax issues in Brazil that I just mentioned. In this regard, I think, let Netflix hit bottom completely, and once it bottoms out, I think the outlook for them is still relatively positive. On another note, the S&P dropped 0.51%, and the Nasdaq fell 0.93%. Also, the Philadelphia Semiconductor Index dropped quite a bit yesterday, down by 0.36%. Why? Mainly because of the impact from the EAD. As a result, the entire chip sector was hit pretty hard. Only Qualcomm went up by 0.26%, while the other 26 or 29 stocks in the group all fell. The declines were all pretty steep. For example, analog devices dropped 5.72%, NXP fell 5.6%, and there were 4 stocks that dropped more than 10%. 8 stocks dropped more than 3%. Honestly, looking at these declines, it's really pretty bad. Earlier, I mentioned that there was a key bullish candlestick, but instead, it turned out to be a bearish one. So you need to be careful here. There's a higher chance things could turn weaker. Now, as for the Magnificent Seven, it's the same situation. More stocks fell than rose. Microsoft went up, Google went up, Facebook went up, but Nvidia dropped, Tesla dropped, Apple dropped, and Amazon dropped. Okay, so let's take a look at some individual stocks, just to get a general idea. But the main focus is still on the futures market. It seems like there's a slight drop, and things are looking a bit shaky. Let's quickly check Bloomberg. Let me walk you through it first. So, that's how it is with gold, and then we'll use this gold webpage to catch up on the Dow Jones trend, since I didn't post the latest update earlier. Sorry about that. Let's take a look now. Alright, actually, yesterday didn't look good at all. It dropped 0.7%. Originally, if you look at it, the macro trend was the best, with momentum pushing upward, but it didn't go up, it went down instead. If it doesn't go up when it's supposed to, that's a real problem. This probably means it's still pretty volatile, sideways movement, consolidation, or maybe it'll keep consolidating and then move higher. We'll have to keep watching. One of the key factors here is definitely Trump's stance. The 10-year interest rate is still relatively high. Actually, it's a bit too strong. The 2-year rate is pretty much the same situation. Also, the US dollar is a bit weaker, but it's still holding at 99. Now, let's take a look at the pre-market. Actually, the losses have widened. Just now, when I checked, everything was down less than 0.2, 0.1, or 0.3%, really small, like 0.0 something. But now, it looks like the losses have gotten bigger. Let's take a look. Stocks that are going up. Wesfarmers is moving up. Let's click on it and take a look. Everyone, refresh the page. Wesfarmers is trending upward, and Dow Chemical is also up, as well as Vegas Sands. Ingersoll Rand is up, and CBRE is also up. Several of these had earnings reports in the past few days. Honeywell is up too, and it looks like it's being driven by its earnings report. Then there's APA. FNG Steel Dynamics is also up, as is OXY, Occidental Petroleum. And this one should be too. LYB, one of the industrial stocks, I forgot what they do. Okay, then FCX, this one is in mining, copper mining, and it's rebounding. DVM. It should be related to energy, I think. Okay, then EXC, this one is in energy too. So, looking at the top 20, that's pretty much how it is, and we see that most of the gainers are accelerating. But here's the weird part, why are the futures down then? Let's take a look at some of the stocks that are down. Alright, MOH. That's Molina. Downgraded. Expected to be downgraded again, yeah, because of cost issues. So this one looks like it's dropping pretty hard. And IBM is also down a lot. Like I said, actually, it's the same for everyone. Everyone is concerned about the same thing, so even if you emphasize how good your AI is, it doesn't matter. What matters is what everyone is actually concerned about. When there's a stronger consensus, you can see the drops or gains are more pronounced. Now, Saint Ding, this should be an industrial-related company, Rapper Technology. They released their earnings report a few days ago, and it looks like the market wasn't too happy with it. Alright, then for PKG and Mima, this Madonna is actually having a tough time right now, and the others aren't really making money either. After the COVID-19 pandemic, they haven't come out with any new products, so that's just how it is, and the stock keeps dropping. Tesla is also falling, and it seems to be the same story. It's an issue with car sales. These are all concerns that everyone is paying attention to, so all these negative factors need to be digested before we might see any positive performance. Tesco is a tractor company, and it doesn't look too great either. Micron is still dropping as well, probably because it had gone up quite a bit before. But I still think that if overall AI hardware spending isn't an issue, memory chips will remain relatively strong, and that's the result. For KLA, good earnings, but still downgraded. Supermicro moves with it. Texan, is that oil? No, it's a small defense stock, a minor military stock. It missed expectations, so its performance wasn't good. As for SW, I'm not too familiar with it. Then Hasbro didn't do well either. It looks like their earnings report was bad. UNH might have been dragged down by Molina, since they're related. If I remember correctly, they didn't release their earnings today. Then, Elements, this healthcare stock, is trending down. KLC isn't doing well either, and, yeah, Intel didn't do well either. Humana, it looks like Molina Healthcare dragged down HCA, HUM, and, the others as well. And First Line didn't perform well in Texas. ESRN didn't do well, and N Supplement didn't do well either. I think today, the reactions in the supplement sector were all pretty big, so it's possible that the futures market will be more volatile. Even if things look good, it still feels like it might go down. Of course, the sentiment here is still focused on Trump and China. Everyone is watching closely. If it really turns out that they're not going to meet, the correction could be much bigger. Now, let's take a look at everyone's questions. The screen didn't show. Sorry, there might have been a bit of a delay at the beginning. Hi, Yonglin, thank you. When it comes to China, we still need to pay attention to the issues with the major powers. Actually, our general manager Rico has mentioned before that when it comes to these big countries, we now have to look at both politics and economics together. The more relaxed era of globalization is over, so now we have to pay closer attention. Regarding the political part, hey, after switching to the next screen, everything should be fine, right? We're not just talking about stocks, but also American politics. Lately, there's no way around it. Today it's Trump commentary, of course. These days, it's all about Trump. On our side, if there's economic data, we'll discuss it. If not, I can only talk about this. The briefing has been updated. Yeah, it should be him. Let me check. Why isn't the screen moving? Alright, this is strange. Sorry about that. Actually, on our end, I didn't notice this issue because my screen here is still running. Not sure if there's a connection problem. Sorry about that. I just realized this issue now. It's the screen that's frozen, not that my file isn't moving. Maybe I need to. I might not be able to fix this problem. I don't know why it's stuck like this. I'm really sorry about this. Okay. Alright, so, Tesla has Twitter, and sometimes with Tesla, it does that. It can be like this. Yeah, that's right. I think in the end, we still have to look at this robot. There are Trump supporters here, so let's congratulate him. I mean, if Trump is considered the greatest president, then we also wish that he gets what he wants. Let's see if manufacturing can catch up with the good news. Let me ask about that, okay? Yeah, actually. I also didn't notice why the screen wasn't moving, because on my end the display looks fine. Okay, I might need to check with my colleagues about this. It's really quite a mess, huh? Alright, sorry about that. Let's take a look at this file. It's probably because of something from before, from earlier. I'm not sure about the situation here, but, let's do it this way. Hello everyone, if you go to the Cheney Delane site, there's a PDF version available. You can check it out and open it to take a look. Actually, we do update it regularly. We're not using yesterday's file for this presentation. In our line group, you can also check out the PDF file on Cheney Delane. Yes, I just remembered, it's available there too. So please go there and take a look. Now, why are the files all stuck? That's a bit troublesome. Alright, let's take a look at something else. Sigh, the screen is down. Oh, I switched to this, and I can't see it on Bloomberg either. I might need to ask where exactly this problem is happening. Alright, so I'm really sorry about today. This technical issue we're having right now, I'll try to find a way to fix it. As for the Trump-related questions, we'll talk about them later if there's another chance. Honestly, I hope we don't have to talk about him again and can focus more on economic data and corporate earnings. But, well, he does have an impact on the direction of the market. So, if that's the case, let's wrap up today's show here. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.